order to buy Bitcoin. And we've been doing that because we wanted to pump $65 billion of capital. Its position was the company is worthless. The stock is going to zero. Bitcoin is going to zero because they can't sell. It turns out that the break-even point for us is about 3.2%. So if Bitcoin appreciates 3.2%, we can pay the dividends forever. Most of these businesses that work, and the best idea is that they start with someone dominating a market. I'm really good at this.
Mark Zuckerberg.
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
What if one of the biggest fears surrounding Bitcoin has already been disproven? For years, critics argued that if the world's largest corporate Bitcoin holder ever sold even a fraction of its holdings, Bitcoin's price would collapse, investor confidence would evaporate, and the entire institutional Bitcoin thesis would begin to unravel. Recently, that theory was put to the test. Strategy, formerly known as MicroStrategy, sold a portion of its Bitcoin, not because it had lost faith in the asset, but to prove something the market fundamentally misunderstood. And according to Executive Chairman Michael Saylor, the results changed the conversation entirely. But here's what makes this story far more important than a single Bitcoin transaction. Behind that sale lies a much bigger debate about institutional adoption, corporate finance, market psychology, and the future of Bitcoin as a global reserve asset. Today, we'll break down exactly why Strategy sold Bitcoin, why the market reacted differently than many expected, how the company's financing model actually works, and whether Saylor's long-term vision still makes sense in today's macroeconomic environment. We'll also examine both the bullish and bearish perspectives, because understanding risk is just as important as understanding opportunity. Finally, I'll share my own analysis of what this means for Bitcoin, gold, and the broader digital asset market over the coming months.
I guess we've got about $6.5 billion of convertible debt and $15 billion of preferred stocks outstanding, and we're sitting on top of about $58 billion of assets right now. So we have raised about $65 billion in capital to buy Bitcoin, but most of it wasn't debt.
Oh, okay.
Of the $65 billion, for the most part, we've raised capital with equity and some debt in order to buy Bitcoin. And we've been doing that because we wanted to pump $65 billion of capital, of money, of energy into the ecosystem. So we're powering the ecosystem with capital.
Everyone theorizes, I've seen a few people on my timeline that I follow theorizes how bad it would have to get for Bitcoin in terms of price for you to be in trouble. Because
Bitcoin could fall to $5,000 a coin. We would still be over collateralized against the debt.
You'd still be fine.
Yeah.
And the other thing people theorize a lot, and again, I did a comment analysis to figure out what people wanted to hear from you, is you sold a bit of Bitcoin. You've been asked this a few times, I know.
Yeah.
You sold a bit of Bitcoin recently after telling a lot of people maybe to hold on to their Bitcoin. People want to know why you sold the Bitcoin.
Okay. Well, so let's make the first point. The only person that's never sold more Bitcoin than me
Satoshi?
Is Satoshi. Satoshi never sold a million one Bitcoin. Our company has 847,000 Bitcoin. And so we bought more and we're holding it more than anybody other than Satoshi, and Satoshi's not active. So we have a reasonable chance of never selling more Bitcoin than Satoshi if we just keep at it for the next few years. What I've said is...
Sorry, I should probably share this. This is why there's a kidney.
Yeah.
Because you said, sell a kidney if you must, but keep the Bitcoin.
I have waged a campaign nonstop every day for 6 years to promote and advocate Bitcoin as a long-term store of value, right? And what I would say is, if you have money that you don't need for the next 4 years, and your choice is, do I invest it in the S&P or a house or a private company or soybeans or money markets or debt instruments, I think that Bitcoin is the best, right? I think that Bitcoin is digital capital. It's going to be the best long-term capital asset. And, So
why did you sell the Bitcoin instead of your kidney?
Yeah. We sold some Bitcoin a few weeks ago because there was a narrative or a belief in the market that our company had become so systemically integrated or important to Bitcoin that we could never sell. And if we sold, Bitcoin would go to zero. And our stock would go to zero.
Because you own 4% of the total supply of Bitcoin.
Yeah, because we own 4%, because we're the biggest buyer. We're the biggest buyer of Bitcoin in the world. So the first sentiment was, well, Bitcoin will never succeed if they don't keep buying. And the second sentiment or belief, misconception was, if we sell, it'll crash Bitcoin and it'll crash the company. And because of that, short sellers and certain people in the market took the position that the $55 billion of Bitcoin we own was worth nothing. And so what we had was this ignorant, skeptical notion that all the company's assets were worthless. And because the company's assets were worthless, we wouldn't pay our dividends. And because we wouldn't pay our dividends, the credit would go to zero and the equity would go to zero, the company would fail and Bitcoin would fail. And we said, well, Bitcoin trades $20 billion a day or more, and we've got 55 billion of it. And if we were 0.01% of the market, we could still meet all of our obligations, and it's not going to change the price of Bitcoin. But no one believed us. So if you want people to believe that you can do a thing, you have to do the thing. If you told me you could do a backflip right now, but I said you can't, at some point you have to do the backflip, right? Especially if I tell you that I'm going to throw you in jail if you can't do a backflip.
Who told you that?
Well, that's exactly what's going on in the market. The market's position was the company is worthless, the stock is going to zero, Bitcoin is going to zero because they can't sell, right? So if we want to defend Bitcoin, like, we have to prove that we can sell it on occasion, right? So what we're doing is we're commercializing the market in digital credit. And if you have $1 billion of Bitcoin and they believe it's worth $1 billion, you can sell $200 million of credit, and then you can grow the business if they believe that. If they don't believe that the Bitcoin is worth anything, you can't, and you sell the $200 million of credit, the credit's worthless and the company's worthless. And so we were in a doom loop, or the market was in this doom loop, this negative, short, I don't know, like a psychosis, almost like hyperventilating, saying that the largest buyer of Bitcoin can't sell it, and if they do sell it, Bitcoin will fail. And what we needed to do was demonstrate that if we sold Bitcoin, it wouldn't fail. So when we sold the Bitcoin, it was 59,000 and it traded up. And so we broke that misconception. We broke that narrative. It turns out that the break-even point for us is about 3.2%. So if Bitcoin appreciates 3.2%, we can pay the dividends forever by just selling the Bitcoin. But you can imagine if you're a short seller, you say, well, you can't sell the Bitcoin, ha, 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 because Bitcoin will fail. And so they want to say that the credit is worthless because you won't sell the Bitcoin. So the way to break that cycle is you sell the Bitcoin. Now you can illustrate that the credit is actually good credit. We can pay the dividends forever. And now the credit investors...
Without having to sell more Bitcoin.
No, the whole point of this was we were selling equity in order to pay the dividend on the credit.
Yeah.
And the short sellers took the position that you're going to sell the equity until the stock goes to zero because you can't sell the Bitcoin.
Yeah.
So how do you break that? Well, you have to say, well, we can sell the Bitcoin.
And you sold enough Bitcoin to pay the dividend.
So we sold enough Bitcoin to pay the dividends to prove that we could fund the dividends with Bitcoin, which means we don't have to sell the equity. And if we don't have to sell the equity, then the equity trades at a premium to Bitcoin, trades rationally, and then the credit trades rationally. So it was a benefit to the equity investors and the credit investors to show that you can power the company with Bitcoin.
Do you intend to sell more?
It's not our primary strategy. So if the common stock trades at a premium to the underlying assets, then probably we fund with the common stock. But if the common stock ever sells at a discount or trades at a discount to the Bitcoin assets, then you sell Bitcoin in order to protect the common stock.
The interview wasn't solely about Bitcoin. Saylor also discussed long-term business strategy, drawing comparisons with Elon Musk and Amazon. His central theme was remarkably consistent. Great companies don't chase random opportunities. They build layer upon layer of competitive advantage. He compared successful businesses to the Fibonacci sequence or the chambered nautilus, a natural pattern where each new layer builds directly upon the previous one. Tesla didn't simply build electric cars. It developed battery technology, manufacturing expertise, autonomous software, and energy infrastructure. Amazon didn't become dominant overnight. It spent years sacrificing short-term profits to build logistics networks, Prime memberships, and customer loyalty. Only after creating an enormous competitive moat did those investments begin generating extraordinary cash flow. Saylor argues that strategy is attempting something similar. Rather than diversifying into unrelated businesses, the company is continually reinforcing its Bitcoin strategy. Whether investors believe that concentration is visionary or risky depends largely on their own conviction about Bitcoin's long-term future.
I think Elon thinks like an engineer, and if you look at his businesses, they're all built upon each other. Like if you figure out how to launch a rocket and you have the highest payload capacity and the cheapest cost to orbit, then you've got an advantage. Now the question is, what do you want to put in orbit? We put satellites, but what satellite? Like Starlink satellite, because that's the thing everybody wants, internet. And so all of a sudden he's got an advantage, in the sky, and then you build on that advantage. And, with battery technology, right?
But he could have gone to Russia and bought a rocket and just shot that up, and that would have been the short term. Even with Tesla, he could have bought the batteries off Ford. Or
one great natural example is like a chambered nautilus. If you look at a creature and it's building a shell and it's spiraling out on itself, and basically it keeps building on its own structure, and it's nature's solution for growth under pressure. It's the Fibonacci sequence too. If you look at a Fibonacci sequence, if I have this and then the next structure is here and the next structure is there and the next structure is there, part of my previous business is the foundation for my next business. And so if you're thinking your growth strategy is to build on a foundation of something you already had and extend its functionality in a natural fashion, that's natural, stable growth. When your second business idea is unrelated to your first business in any way other than the fact that you own both, right? Now you're not building on a stable foundation. So most of these businesses that work and the best ideas, they start with someone dominating a market. I'm really good at this.
Mark Zuckerberg.
Yeah, and now what is the natural thing that I can add, that I can use my existing business to maybe I'm marketing it? Well, you're Coca-Cola. Well, we deliver a pallet of drinks to 87,000 restaurants in the UK every morning. What's a natural extension? Well, I can put one more type of drink on the pallet, right? You need to use your distribution strength, your market strength, your technical strength in order to lever. I think you look at all the great businesses in the history of the world. Again, Standard Oil, Ford Motor, Boeing, Microsoft. The things they did that worked were generally building on top of their foundation, either loyal customers or distribution or some financial asset they already had. Another way to say it is, if there's no one else in the world that is better situated to do this thing than you, then you're probably in good shape, right? If there are 97 other companies that have more assets than you in that space, well, you got to bet that all 97 of them are not going to react to you when you do it. It's a bit harder.
And that's where the long-termism comes in, because to build that fundamental advantage, it by definition is going to take time.
Good example, Amazon Prime, right? Where Amazon started giving free shipping, first free shipping or very cheap shipping and one-day shipping. And everybody said, well, you're losing money. And they lost money doing this for like a decade. And then they got to some point where like everybody in the country was a member of Amazon Prime. And they're like, okay, well, now it's $20 a month instead of $10 a month. And it's like an extra $10 a month times like 100 million people. And people are like, oh my God, they just made $12 billion in one press release per year in cash flow. And that's worth like $250 billion. And you're like, what were you doing? It's like we were building the moat. That story is not uncommon with every other thing. It's like you first believe, you build the biggest distribution channel you can. People are going to tell you, well, there's no future to whatever, the podcast. There's no future to something And what'll happen is 99% of the people will drop out because they don't believe. And the true believers, the ones that are not creative, won't adapt. And then there'll be some that'll say, I believe, but I also know there's a threat, but I'm going to channel the technology threat and I'm going to evolve and I'm going to emerge as something 1,000x better than anybody could conceive. And that's a beautiful story.
As we wrap up, it's worth stepping back from the daily headlines. Markets often become obsessed with short-term price movements. One day, the focus is on inflation. The next, it's interest rates. Then it's ETF flows, geopolitical tensions, or a single corporate transaction. But truly successful long-term investors usually concentrate on structural trends rather than daily noise. That may be the biggest lesson from Michael Saylor's interview. Whether you agree with his conclusions or not, his decisions are driven by decades-long thinking rather than quarterly market fluctuations. He views Bitcoin not as a speculative trade, but as a foundational form of digital capital. Time will ultimately determine whether that vision proves correct. At the same time, prudent investors should remember that conviction should never replace risk management. Diversification, position sizing, liquidity planning, and continuous research remain essential regardless of how optimistic anyone may be about Bitcoin. For many portfolios, gold continues to serve as a reliable hedge against monetary instability, while Bitcoin offers exposure to a rapidly evolving digital monetary network.
You know, the funny story of that is I was invited to a cocktail party of a billionaire on the French Riviera in a beautiful home. And I showed up and I walked into the party thinking I was going to hang out. And another billionaire showed up and he said, you know, Mike, I just had twins, a boy and a girl. And I'm walking around asking all of my friends for advice for them. And I want you to write some advice for them that I can give to them on their 21st birthday. And he's got this book where he's actually collecting advice for his children to give them on their 21st birthday as young adults. So I sit down and I think, and I'm like, focus your mind, guard your time, and train your mind. You gotta learn something, right? You gotta learn reading, writing, arithmetic. You have to actually develop a cultured base. So it's like get an education and then train your body. Because if you're weak, you're not going to make it, right? You're not going to survive. And then think for yourself. Everybody in the world wants to program you to believe to do something they want you to do. And you have to have the presence of mind to think that's not right. Just because everybody that I know and famous, rich, and beautiful people tell me it's right doesn't make it right. You need to decide, think for yourself. And then curate your friends. Because you become who you surround yourself with. And if you surround yourself with positive, inspirational, talented people, you'll be the best version of yourself. And if you surround yourself with negative, cynical, failing people, they're going to want you to fail, or they're not going to inspire you to succeed, and they'll bring you down. And so after curate your friends, curate your environment, right? Make it a happy place where you can work or you can live. And, the world didn't say you had to be in the dark in an ugly situation. And after that, keep your promises. At the end of the day, people remember if you didn't keep your promise. So you tell someone you're going to do something, do it, right? If you keep your promises, you'll find those are the people that invest in you. They uplift you. They make you successful. They may be the difference between life and death, or the difference between success and failure for you. And ultimately, we're all in relationships with each other, right? And no one is so powerful that they can afford to take anybody else for granted. We all need each other. And finally, stay cheerful and constructive. It doesn't matter whether bad things happen. The point is, people want to come to work with someone that's cheerful and happy and constructive. They want to be in a relationship with that person. All of those are just basic principles to get through life. And then the final point is upgrade the world. If you have a plan, if you're on a mission to upgrade the world, you're going to feel better about yourself. You get up every day, you have a mission, you have something to do. What is my mission? I'm preaching the gospel of digital empowerment, right? Satoshi created this economic property right. He gave economic empowerment to 8 billion people for the first time in human history. And we created the world's first perfect money. We created, digital energy, digital matter, digital property, right? We can be 1,000x more as humans with technology than we were. I look through all human history and I see it's a story of misery. Why do people die? Lack of clean water, lack of clean air, lack of clean food, lack of clean money. What do we want? We want to live forever. We want to live happily forever.
Do you want to live forever?
I want to live as long as I can live, constructively and make a contribution. If I can be engaged and vital, then yeah, at the point that I can no longer make a contribution, then I will move on gracefully.
But if there was a button in front of you now and the button pressing it guaranteed you immortality, would you press it?
I think so. I suppose so.
Why aren't you then committing more of your efforts to longevity? People ask Elon the same question.
I think there's 8 billion people on the planet, and there are many people that I respect that are much more qualified to pursue that mission than me.
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.